Welcome to the channel, guys. My name is Jess. So the price action of Bitcoin was absolutely brutal last night. At 10:30 p.m. we had some bearish economic data come out, and by 4 a.m. the price of Bitcoin had dropped nearly 5% and altcoin market cap dropping 8%. Nearly $400 million in longs were liquidated in the last 12 hours, which is the most it's been for a while, and Bitcoin is now at a critical level of support. So let's dive into the charts today to talk about all the recent price action and what it means, and what we need to see for either a bullish reversal or bearish continuation. Before we do though, make sure you guys like and subscribe to the channel down below to get regular Bitcoin analysis every Wednesday and Saturday, and ring that notification button so you never miss an episode. If you're looking for even more content, be sure to check out the free Telegram channel over here, which gives you daily Bitcoin updates as well as crypto and economic news. If you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trade setups with exact entry points, targets, and stop losses. Alright guys, so diving right into the charts, we can see the crash that happened right here. It started exactly at 11 o'clock at night as soon as that job data came out. So let's go over and take a look at the data that came out. So non-farm payrolls is essentially job data, and all the data that I ever talk about on this channel will usually be US based because they have the most influence on the market generally. And non-farm payrolls, for those of you who don't really understand what it means, the only thing you really need to know about it is that it is a leading indicator for inflation. If we have more jobs coming out than expected, then the economy is growing faster than we expected. Inflation is likely to be higher than we expected, and that is bearish because higher inflation means that we have a lower chance of getting rate cuts. And, the market is currently pretty much hinging on the rate cuts that are happening later on this year. So if we don't have rate cuts, or we have a lower probability of rate cuts, cost of debt is higher, and with the cost of debt being higher, the market doesn't really grow, right? It's the cost of debt becoming cheaper that really causes these surges in the market. So essentially non-farm payrolls came out bearish. It was a lot higher than we expected, and the market reflected that. So I haven't looked at S&P 500 yet, but I'm sure if you took a look at the stock market, it probably dropped a little bit as well. Not as much as Bitcoin, as always, but it still dropped. Altcoins in particular really bled though. So if we take a look at total cryptocurrency, or total altcoin market cap, we had an 8.4% drop overnight in that last 12-hour period, right? So that is absolutely huge. And a lot of altcoins went from retesting these parabolic trigger levels, these parabolic trigger points or key resistance levels on their charts, to going back down to retest high time frame support levels. So pretty big flush out. Some altcoins even dropped nearly 12 to 20%. Huge. Anyways, so moving back onto the Bitcoin charts, let's dive in and talk about what this crash means and the really critical position that Bitcoin is in right now, and all of that. Before we get into any more analysis, guys, let's hear a quick word from our sponsor, Bitunix. Bitunix is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 US in sign-up rewards, and get 15% off all of your trading fees by signing up using the link in my bio, or by using the code 1GG3 when you create your account. So zooming out and taking a look at all the recent price action, right, we can see that despite the crash, Bitcoin is still in its month-long uptrend, right? We managed to get a candle close above the uptrend on a 12-hour time frame. Looks like we might be bouncing. We're forming the beginnings of a green candle, and we have continued to bounce on our locally established support at $69,000. So just looking at the chart from a high time frame perspective, things are still looking fine. The overall uptrend is so far still intact. But what we can also see from the recent price action is, let's zoom in a little bit onto the 4-hour time frame, that Bitcoin in this most recent move, right, because most recently we had this massive breakout of a high time frame pennant formation, right? Broke out of a downtrend. We established a new high over here at $69,500. That's great. This was our support. That was the bullish trigger level. But in this bullish continuation above $69,500 and above this level at $70,700 over here, the move to the range high didn't result in a breakout. So the timing of this crash and the level that we approached that crash from in this range high tells us that now on the 4-hour, 12-hour time frame, Bitcoin has formed a double top, right? We can see the double top because we've had, right, the first thing we look for, an extensive rally, a move to test local support, another rally, failed to break above the prior high, and then generally we see a bearish continuation. But as always, pattern formations are pretty, speculative. We need to find validation. So in this circumstance, we know, okay, we formed a negative pattern, but we are also in an uptrend. So realistically, right now, the big question is, at this very critical point of support on this uptrend at $69,000, what do we need to see to, first of all, tell us we're going to have a bearish continuation, continue downwards, or that we've invalidated the double top formation and that we're going to have a bullish continuation upwards. So let's go ahead and start off with the bearish case scenario. And to do that, we're going to zoom in a little bit onto the 1 hour time frame, because that's where we can really see those trigger levels that are important to this crash. So the logic here for the bearish continuation scenario is the same as it was when we were in this downtrend over here. So on the 1 hour chart over here, we can see that when we were in that downtrend, essentially what we were doing, regardless of whether or not you can draw in the trend lines or not, is forming lower highs, right? We were in this pattern of forming 3 lower highs. And after we broke out of the downtrend, if we draw it in really quickly, after we broke out of the downtrend, we still weren't able to have a bullish continuation because we had not had a candle close above that prior high over here at 69,500. It wasn't until we managed to establish a 4-hour candle close above 69,500 that we had a bullish continuation to the range high. So the same logic applies for the reversal. So over here we can see that after this crash, we went down to retest at this critical level of support over here at 69,500. And taking a look at the candle closes in our uptrend over here, or like a short time frame uptrend, we have a higher low, higher low, another higher low, and a current higher low. So in the bearish case scenario, to see that bearish continuation, what we need is a candle close below the prior higher low, because that invalidates the formation of our short time frame uptrend and tells us that we are going to see a further correction downwards. So in that circumstance, when we do correct lower, the first target that we have is that next liquidity level. So that's down here at $67,200 and again at $66,600. So essentially what we're doing is approaching that next key level of high time frame support at $67,000. We can zoom out and see on the 12-hour time frame, it is the midline of our massive channel of consolidation over here, right? So falling to $67,000 tells us that, that our major uptrend has been lost, and if we don't continue to sustain support at 67,000, we are going to fall to these lower ranges of the channel over here. So that tells us that there's a high potential for a correction to 65,000 and 60,000. Essentially, these bases of support that we have in the lower ends of the channel. So macro correction and a macro bearish continuation. So that's naturally not what we want. And that's the first thing to be looking out for, is that continuation trigger on the short time frame charts. As of right now, though, the bullish case scenario is still somewhat intact because we are still in that pattern of forming higher highs. We take a look at high lows. So I always mix it up. I don't know why I cannot just say high lows and high highs. Like, it never works for me. Anyways, you guys get the gist. Higher lows. So we can take a look at the candle closes here. We've got 1, 2, 3, and we are still forming that higher low over here. We haven't broken below this liquidity zone just yet. We had a little bit of a flash downwards, but the close on the 1 hour time frame was above that level, so that's still a good sign. Still in an uptrend, so we do have a pretty high likelihood of continuing upwards here. But the main problem is that regardless of this continuation upwards, until we break above our range high and this key resistance over here, the double top formation is still intact. So in order to really get rid of that and invalidate that formation and, I guess, confirm a macro bullish continuation upwards, we need to break above this range. We need to break above the range high at $72,000. Now, what's going to trigger that move? First of all, we need to talk about what's going to trigger a move to $72,000, because we are still, pretty while away from there. We're at $69,000 right now. So zooming out to the 4-hour time frame, we can see that the same kind of principle applies yet again. So let's just get rid of that downtrend for a moment and all these little circles. Now, to trigger a move or a bullish continuation above to $72,000, we have our little key resistance over here, right? The same resistance that we had to close above to maintain a move to the range high prior to this, right? Prior to the crash, same resistance. exactly the same, 69,500. We need to get a candle close above that level to get a bullish continuation upwards. Now, in that bullish continuation, the first target that we have is that next local high, right over here at 70,200. So that's the base, that's that candle close. I think actually 70,300, right? That will be the candle close. We need to establish a candle close above that level as a base of support, right? Same thing that we did over here when we consolidated within that little level before getting bullish continuation. And the bullish trigger to get to the range high will be the end of that liquidity zone over here at 70,700. We can see that, I think, on the 1 hour time frame as well, using the exact same indicator, liquidity swings algo. Does it pop up? No, it does not. That's okay. It doesn't really matter. We can see the end of the sell side liquidity zone over here. So pushing above this level tells us we're going to go to the range high, which I know sounds silly, you know, oh, we go higher to go higher. Yes, that's how the price action works. We need to trigger breakthroughs above key levels to continue upwards, right? If we don't, even if we go up and we don't go above a key level of resistance, we're just going to reject back downwards. Same thing that we saw over here, right? So that's going to take us to the range high. Now, to get a break above the range high, what we really need to see is actually on a higher time frame charts. So we're going to move over to the daily chart over here. And I did speak about this in my last video because I thought we were going to get this close earlier than this, but obviously we crashed downwards because of the NFP data last night. Doesn't really matter. Same principle applies. So on the daily chart, we can see that historically, this level of support, this level of resistance over here at 71,500 is a critical level of resistance that breaking above and getting a daily candle close above triggers a move to the upper ranges of that resistance at 72,700, aka an invalidation of our double top formation because we're trying to move above this level. So as we can see from the chart over here, right, the first time we had that candle close above, we had the move to the all-time high. We had a rejection, another rejection, a candle close above, and the move to the range high. A rejection, a rejection. So if we break above and get a candle close above 71,500, that will trigger a move at least to the upper range of that resistance at 72,700, which would invalidate the double top formation and suggest a bullish continuation upwards. Anyways, so we know what's going to take us to the range high, but the next big ticket question really is what's going to take us back to the all-time high and a break back above into price discovery. And the main bullish trigger or the main sign of strength that we need to see to validate that scenario or say that scenario is the most likely is on the weekly chart. So if we go over onto the weekly chart over here, we can see that historically the highest candle close that we've had within this range has been at $71,300 over here, right? Let's get rid of all the rest of these lines so we can see it a little bit more clearly. So if we move up to the range high at $72,000, we break above. If we get a weekly candle close above this key level over here at 71,200, that tells us that we are approaching these levels of resistance up here, these upper ranges of resistance with more strength than we have done historically, right, in the last 2 to 3 months, which tells us that we have a higher probability of breaking above the all-time high and pushing us back into price discovery, right? We can see historically, you know, we've approached this level of resistance and rejected from that level, gone back down to $60,000. Same thing over here, tested it, unable to close above that level, gone back down, $60,000. Right, so over here, we tested that level, gone back down to retest the uptrend. Again, retest that level, testing the uptrend. So we are approaching this level of resistance from a position of more strength than we have done in the last 2-3 months. So the probability of us doing this and getting this weekly candle close is higher than it has been in the past. And if we manage to get, you know, all those prior short time frame validations that we need to move up into these levels over here, there is a very good chance that these are the next moves that are going to happen after that in terms of macro continuation on the very high time frame. Alrighty guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to like and subscribe to the channel down below. And if you're looking for even more content, be sure to check out the free Telegram channel for daily Bitcoin updates as well as crypto and economic news. If you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trade setups with exact entry points, targets, and stop losses. And if you are a trader, sign up down below to Bitunix to get 15% off all of your trading fees and up to $5,500 in sign up rewards. Hope you guys have a really great week and I will see you next time. Bye.